Well, how are we doing today? Welcome to our Beers in the Back recording. We are going to kick around. Yep. Today we are featuring Sam Adams Oktoberfest in the Waterloo office.
There we go.
Got our SEP1 Quarterly Stocks Report today. Got our small grain summary. I will probably allow Scott and Bill to talk about that since they typically don't care about wheat. I guess we'll just jump in here. I think when you look at the stocks numbers first, I think the primary thing, at least as far as causing market price movements, was that bean stocks number. Now, the trade was looking for 242 million bushels of stocks, which, by the way, is our official ending stocks for last year and our official beginning stocks this year. And I think the bearish price action wasn't because the miss was very big, but I think we saw exactly the same thing when we got the September WASDE. In other words, the soybean balance sheet is forecast to be so tight this year that we just can't afford to lose any bushels. And I think the most bearish thing about the September WASDE report and about this stocks number, because you saw the whole soy complex go down after the report came out, is it was a little bit bearish, but more than anything, it's almost bearish if it isn't bullish, because the market's building risk premium in, because we literally, with the ending stocks number that the USDA is forecasting and what Bill's forecasting, we just don't have enough extra. We're right there at that, close to that 5% of use type number. And remember, I always remind people, 5% of a 52-week year is about 2.5 weeks worth of beans. And that's at the beginning of September. And we typically don't start harvesting till the last half of September. So 5% is out.
Pretty much
is out. So do you see it a whole lot different than that, Bill? The stock side of it?
No, I guess the theory is that they adjust the stocks so that their residual is near zero, and they did that again this year, it looked like, with the changes to the stocks as well as the crop. So we'll end up with a residual near zero. So I don't put a lot of stock in that. It just kind of tells you you're pretty much bare bone dry in terms of stocks. Just kind of a side note, whatever that stocks is at the end of the year, it's relative to a very slow usage time of the year. So it looks like it only lasts about 2.5 weeks, but it probably lasts about 5 weeks because we're almost not exporting anything.
Right. I guess that 5% of use is 5% of the use for the whole year. And your point is you're not really using them very fast in September.
Just crushing almost no exports. Correct.
Yeah.
Yep.
Yeah. Well, that's a good point. That's a good call out. You say they adjusted the crop.
Yeah, they adjusted.
I didn't see that. I'm kind of a top line guy. What did that say?
That was down 13 million bushels. They took it for the final 2022 crop, final from 4276 to 4263. So we made 2 adjustments, and that ends up shrinking your residual to near zero, which seems to be almost their goal sometimes. It's a lot of inside baseball, I guess. It ends up we have 268 million bushels, and with the kind of demand and supply we have in 23, 24, we can completely focus on that now.
Okay. 268's the number coming in, and all your figuring and the USDA's figures, right? That's going to leave us actually about the same spot at the end of this crop year that we just started, maybe even a little bit tighter than that, but pretty snug. Do you see anything in the corn numbers at all?
If anything, that was the one that was a little bit friendly. They took the crop down slightly. I believe 15 million bushels, if I recall right. Not a whole great deal of change there, and they usually don't. And the stocks came in on the light side by almost 90 million bushels. So, that doesn't. 90 million bushels doesn't hurt us when we're taking ending stocks up 600 or 800 million bushels year over year. So a little bit of an adjustment there, but not a great deal.
Yeah, technically below the average trade estimate, but the reality of the situation is we got plenty of corn, so it's not as big a deal. I think the beans were where the big worry is. We've got a lot of information on wheat. We not only got our stocks report, which looks to be pretty close to what the trade was looking for, but when you look at the new crop, Scott, why don't you kind of give us your analysis on
Well,
what we got on wheat.
Yeah, I would first like to ask Bill a little bit. You're right. Stocks came in just a skosh higher than what was expected, 7 million bushels, pretty much right in line with where we were last year at the same time, at 1.779. My question to Bill would be our first quarter disappearance for wheat, because that was the first quarter for the wheat marketing year, was 614 million, 8% up year over year. Where's that going? I mean, certainly our exports are down, whatever, 14, 15% at this point of the year compared to where we were a year ago. I don't think we're feeding it. So
I wouldn't think so at these prices, would you?
It's got to be going somewhere. What's your take on that, Bill?
So why did we end up with stocks about where the trade expected? Even though we had quite a bit bigger crop, we increased the crop substantially, and it went into usage. We kind of know the exports and the mill grind, so it showed up as a big feed and residual, probably mostly residual. You get a larger residual when you have a big crop, and soft red we do. The other numbers were fairly big. I mean, you could argue that with this number, USDA was at 90 million on feed and residual last time. They could raise it up to 120 million bushels. It makes no sense that we would be feeding wheat because we really didn't have to. So I think it all falls into the residual. I think that, to me, the important thing is that anybody, including USDA, has a harder time measuring a quantity of wheat or any commodity while it's in the field, and has an easier time when it's in a bin. So I trust the stocks number more than I do the production number. I wouldn't fade the stocks number because that looks like it's about the same, and we may be getting a false signal in the market today, being so bearish based on the bigger crop.
Yeah, and again, back to your point about the 614, then this first quarter, it ends up being more of a slush and a residual, right?
Yes.
From last year's crop. So
well, I tell you what, I wish the IRS had let me do a residual.
Yeah.
So I don't have to pay taxes on that money. I don't know what I did with it. Or that I can't account for.
As far as the production goes, I don't know. I think maybe the marketplace sees it as a bit of a surprise. Depending on who you talk to, and if you've been listening to us the last couple of weeks, I've been saying it. I know Bill has been saying it, that we were both believing that certainly the spring wheat numbers would be higher, and that's what ended up happening. The total crop was 1.811 billion bushels. That's up from the September WASDE, which was 1.734, 10% higher than it was a year ago. How did we get there? Well, the yield was up, went to 48.6 bushels to the acre. That's up 2.8 bushels to the acre versus the September WASDE. It's up, 2.1 versus what it was a year ago. Now, they did take the harvested acres down a little bit. That's not terribly surprising, I guess, given, how dry it was in certain areas this year. And, we did hear a lot of abandonment in Kansas and Texas, Oklahoma, and some places. So the harvested acres were down 600,000, but it actually was higher than what it was a year ago, year over year. Now, when you look at the by class, we did get a little bit more hard red winter wheat. We went from 585 to 601. We did get just a little bit more soft wheat. We went from 440 to 449, so another 9 million bushels there. The white wheat was actually, white winter, by the way, was actually down 5. But then when you get to the spring, when you take the whole category of other spring, and that's the way Uncle Sam rolls it out to us on these deals. Other spring is hard red spring, as well as the white spring, and the hard white spring and the soft white spring wheat, and they roll those all together. Anything that's not durum, and that ends up being 505. When you split out the spring wheat by itself, hard red spring wheat, it was up about 18. No, check that. Was this the US? That's last year's. Oh no, I'm sorry.
September was.
That
Bill's
was
giving you
September
hand signals,
WASDE.
Scott. He's giving you hand signals.
Yeah, 450, right? 450 in the September WASDE, actually the August WASDE, and we went up to 468. So it's, it's a little bit better there. The Durham went up from 57 to 59. Wish it was a little better than that, but all in all, we had a bigger crop. And again, maybe because it was 90 something million bushels bigger than what the trade was looking for. Maybe that's why we got the big downside on that as well.
Okay, Scott. So that was this last year, and I'm not a wheat person at all. I'm kind of like Dave. I'm still a novice when it comes to wheat, and I look to your professional wheat knowledge. What part of the reason that wheat was up, right, was because we had it was there was an incentive for guys to plant wheat last year, right? Is that with the whole Ukraine deal? Was that part of the reason? Why did we have this increase in wheat?
Sure. I think we saw a lot of that. The price signal certainly said plant more wheat acres last year.
So what's going to happen for this coming year then? We're going to see a repeat, or what's going to happen?
Well, I don't think we see a repeat. I think in places we'll see some more acres. I think we'll still see some more hard wheat acres. I'm not buying that we're going to, I've read some things talking about 4 to 5% increase in acres this fall on winter wheat.
Sounds like a lot.
It sounds like a whole big lot. Certainly on soft wheat. I don't know that we need a much more soft wheat acres. But 1 to 2%, I think, would be a good place, a good safe bet, shall we say? Not sure where Bill's at on that, but that's kind of what I would.
Bill has that grin on his face, like he's questioning something.
He doesn't believe it.
I was hoping my camera would go away because I really don't know. I wouldn't bet against that. I'm kind of thinking down a couple percent, but compared to last year, we were up 11% in hard wheat and 15% in soft red. We're not going to get that big of a delta. It's going to be plus or minus what it was last year. I think
close. Yeah,
within a couple percent. We're going to have ample supplies. It looks like if we can't export the stuff, and the bigger question for Nate and Dave are, what are we going to do with corn and soybean acres?
Well,
I mean,
the market's screaming for more bean acres right now. I think we had now this is for this fall. I haven't looked at the bean corn ratio for new crop yet, but it got up to almost 2.9 at one point.
For this new, you're talking about next year.
I'm talking about, I'm talking about the ratio got to almost 2.9 for D's corn, no beans this year.
Right.
Which, going into planting cycle in Brazil, that's a big number. I mean, it's not the highest ever, but it can't be too far away.
There are some in the industry that will say, well, that ratio doesn't mean much. And
one of them sitting there,
one of them sitting here
in his office with a grin on his face.
Well, and I think when you talk to farmers, and part of their they'll tend to agree with Bill a little bit in that, and Dave, we've heard it from our buddy Farmer Dave, is that, look, I can plant beans, and if I have a really good bean crop, I might get a 2 or 3 bushel bump in my bean crop. But if I plant corn and I have a really good corn crop, my benefit to the upside is much higher. So maybe, that's part of the reason there's a bit of a reluctance there. I think also too, farmers will just tell you it's more fun to plant corn, but you got to think at some point there's a price point in there where you're like, oh, maybe, but it's not like a farmer's gonna take and say, I'm gonna swing 15% of my acres. It might be a 5% swing here. I mean, I don't think it's going to be a huge.
Let me refute my claim that doesn't matter. I'll refute myself. In 2013, we saw that ratio go from somewhere around 2.4, 2.5 late in the summer, and by Thanksgiving dinner, it was at 3.1, and it stayed above 3 until we were well past planting. And that's in early 2014. And early in 2013 was the drought. 2014, we reduced corn acres by almost 5 million acres, and we increased soybean acres by 6.5 million acres. So we did do it in 2014. The ratio came in, and there could have been other things in play in that year, such as a wet spring that forced them into more soybeans. You know, there's other agronomic things, but that's about as big of a swing as you can get. And that was, you know, partially propelled, I would say, by the ratio being wide. So the market is, but you guys still didn't answer my question. What are corn and soybean acres going to be next year?
I think we're going to see an increase in soybean acres. I think we're going to, I mean, you know, we're sitting, and I don't think it's just the futures price. I think when you look at cash prices in the country, you know, these ethanol plants are not pushing for corn. It's not like they're sitting back saying, I got to have corn. I think farmers are sometimes more driven by what basis is doing than what futures prices are doing. But I think we'll see more soybean acres. I don't know. I'm not going to say a number, but I think we'll see soybean acres.
Come on.
89.3 million acres of beans.
Okay.
Write it down.
Print it.
Not in ink. If you got pencil,
I got it right here.
Okay, so
Sounds like a bet.
Since we're talking about beans, this morning we also, like 1.5 minutes before we got the numbers for the quarterly stocks report, we got USDA's crush numbers. Did you see those, Bill?
I did not.
Uh-oh, putting you on the spot. So I think if what I read was correct, and I'm putting myself in a bit of a hot seat here because I could have just been reading a headline. I thought it said that oil stocks were down.
Yeah, I think they kind of confirmed the NOPA number from what you said. I think they were right around 1.8. Bill, I think that was your projection, was right at 1.8 billion pounds of oil at the end of August based on the NOPA number. And that NOPA number was so damn low that I think a lot of people, there was the whole, hey, somebody made a mistake sort of theory or rumor, if you will, out there. And that's apparently not the case, because that USDA number, unless they sent the same bad data into the USDA that they sent into NOPA, which I suppose is possible. But I don't know. That's a pretty low stocks number. But I did have somebody else tell me, and this goes into the theorizing and prognosticating category, but that because of inventory builds, maybe at some of these big renewable diesel plants starting up, that we go the other way.
Hold on. So what we got at 11 o'clock, see, even we are not right sometimes, was the Reuters expected USDA crush number.
Oh,
the actual number comes out on October 2nd. See, we got confused because that popped up right before the quarterly stocks. Because I said, holy cow, if that's the number, that's a huge oil drawdown.
You said we got confused. You should
Scott, I'm lumping you in with the group just because we have the same person signing her paycheck. But
we're on the phone with you.
Yeah, the expected soy oil stocks as of August 31st were estimated to have declined to 1.8 billion. So we'll have to wait till next week. So I apologize.
Yeah, we will see what they say. That's going to be an interesting
or
one.
Later next week or later.
Or later. Yes, because we might not have it next week.
That's right. We may be flying blind here for a bit. If
the government's closed, we could lose the NOPA or the USDA crush report, or any USDA report for the most part.
And the WASDE.
And the WASDE, if it's closed, we, you know, in I believe it was 2013, we just skipped it.
Well, it looked like, from what I was looking on the news before I came in here, the Senate right now is spending more time talking about the loss of Dianne Feinstein than talking about government funding and keeping the government alive. But I guess when is the deadline? Is it this afternoon, or when is it, Bill?
It's midnight, Saturday night into Sunday is what they said.
Okay.
That's the 30th, right?
Yeah, we got some time yet.
Yeah.
Yeah, we got plenty of time.
It's kind of like when you have that college paper due, right? It's like, I got another 4 hours there.
Let's go to the bar. Give me another beer. All right, you guys, anything else, I guess, to kind of wrap this up? I think my wrap up, and then I'll kick it to you guys, was outside of the wheat, which I don't care about for obvious reasons. I would listen to you talk. I think maybe a reason I don't care about wheat is it's too complicated. Beans are bean and corn are corn, but there's all these different kind of wheats, and Yes, you guys can deal with that. But I think for me, at least on the stock side of it, the big takeaway here is, the market has got risk premium built in for what if we find out we don't have as much. And I think this, again, the September WASDE crop's about what we thought it was. Why was it bearish? Well, because we didn't get a 48.6 bushel an acre number. We got 50.1. Okay, bullet dodged. Are we going to dodge a bullet here on the stocks report? Yes. We have at least as many beans, actually a few more beans than we thought. 25 million bushels of beans is not that big a miss. But the reality is when you're standing on the edge of the precipice, or you're forecast to be standing on the edge of the precipice, any little bit in the right direction helps, and some of that risk premium bleeds out. And that's why I think, I get a customer ask me, well, wasn't that far away? How did you get this big a negative reaction in the bean market? It's because we didn't fall off the cliff for another report. So.
I guess for me and my side on the wheat side of things, you had really not much to talk about on the stock side of things. Everybody was waiting for the final crop numbers, and that was honestly a little bit higher than expected. So I think it goes on top of everything that we've seen this week. Ukraine won some business to Egypt for the first time, and I can't tell you when. They beat Russia. Russia has a bigger crop. We obviously had a bigger crop. Canada likely is going to have a little bit of a bigger crop, and we're at 3-year lows. I think the market is tired of they're tired of the Black Sea, and they're tired of I suppose you could say that they're tired of being a little bit too high, too wrong. And so this to me gives the marketplace a bit of cover to say, all right, we can go down another 5% from here, maybe 10%, again, depending on what corn does. It's kind of got the cover to do that now. They're still not competitive in the world. We're still not exporting anything. So, Bill, comments on anything?
I don't know whether the trade guesses for the next crop report for corn and soybeans will be higher or lower, but watch for a narrow trade range where they bunch them together. Because whether you believe it or not, the people making these guesses, such as including myself from time to time, are not always clairvoyant on what the crop is. And we're just swagging it. And so if those guesses are narrow in, look for a surprise either to the high side or the low side.
Oh, that's interesting.
Just on corn and beans? I mean,
well, I'm talking about corn crop and soybean crop.
Yeah.
Yeah. Nate, you got any final comments? Wish it quit raining in Minnesota so you can get out and harvest those beans.
Well, yeah, I mean, we don't even know if we have a soybean crop up here yet because it keeps raining all the time. We can't get anything harvested. No, I think to your point, the market maybe was a little bit concerned that we would get a smaller soybean number. Oh, that's always a risk, and getting a surprise that way. So I think that was maybe part of the price reaction. I think as we look ahead here, one of the things we hear a lot of our customers talking about is as we hear about all these new crush plants coming online, there's always this concern about, well, they're going to have enough soybeans to crush. And I think we've seen that the market has a way to solve for this, whether it's through reduced exports or whatever. But we're going to start seeing now, I think, the first real effects of this additional crush with that ADM plant and Spiritwood coming online next week, and then some additional crush coming online into next year. Kind of what that's going to do to some of these soybean flows, and also to meal. I mean, we're going to have to export more soybean meal, and what does that look like, and how does that impact the market? Because obviously it's going to have an impact on soy crush margins, and how does all that play out? So I think that's the biggest thing from the oil side of things that I think a lot of our customers are looking at. Obviously, this new crush coming online is viewed as being beneficial from an oil supply standpoint, but how does all this play out as we move into next year? So,
yeah,
first thing is we got to have beans to crush.
Yeah.
So that's
bean market will be watched closely, as will the South American growing season, because we're kind of living on the edge. And as I've told you guys before, the way this market kind of looks to me is for a lot of like corn market, bean market, wheat market, for slightly different reasons, but we've been kind of living on the edge for the last 2 or 3 years. These have been a couple of the most volatile years in commodity prices ever. I think soybean oil last year was the highest ever recorded soybean oil futures. And we've been living on the edge from a supply standpoint. And I think the market today feels to me like, okay, we fixed the corn problem, at least till Mother Nature throws us another curveball. We're going to have plenty of corn in the US. Seemed like we fixed the wheat problem, not necessarily on paper. We've talked many times about the wheat market doesn't feel as tight as it looks like it should be on paper.
Right.
And I think we're maybe one more crop cycle from kind of doing the same thing with beans, but we got to make a crop in South America. Bill, wasn't it 31 million metric tons of extra bean production the USDA is calling for this year in South America?
30 million, 1.1 billion bushels.
That's a lot of beans, but we got to make it. I mean, we're just barely starting to plant the crop. We got to make it. So I think the market, because we're so tight on beans, has got risk premium built in for anything that can possibly go wrong. And I think when nothing went wrong in the September WASDE, we gave some of that back. I think when something didn't go wrong on this stocks report, we gave something back. But we've still got this great big South American growing season. Really, the weather for the next 4 months down there is probably the biggest risk you got in a lot of these markets, I think. So
Can I ask Nate and Dave a question? Are soybean meal futures below $400?
they are currently.
Yep.
If we lose a bushel per acre on the soybean crop, will they still be below $400 soybean meal?
Well, I think so. I mean, you're trying to expose me here, but that's probably the thing that I am the most bearish right now. But
I desperately want to be bearish, but
I mean, we've heard of processors selling clock meal out forward at 40 to 45 under, just because they're like, well, if somebody actually wants to buy this stuff, we'll sell it. And
not
I mean, what'd you say, Bill? We have to export how much more meal this year with the additional crush coming online? Was it 20%?
About 15%, 2 million tons.
actually, it's about 20% on the last deck you sent out. And that was, you stole my thunder there, Nate. I was going to say a wise man once told me that we're going to have meal exports go up 20% if this crush is right. So,
well, and
I don't think that happens at $400.
Got into a discussion on a couple of our calls this week where we started talking about oil share, and there's some folks that are actually pretty bearish oil share just because of some of the belief on some of this renewable fuels, demand, and we can get off into a whole other ditch on whether or not we're overproducing the mandate and what all that means. But I got to think with the amount of meal we have to export and what meal prices are going to have to do in order for that to happen, something's going to have to carry that margin, right? Because the processor's not just going to crush just for the hell of it. They're going to need some margin there for it. So oil's going to have to probably step up and carry that, is my belief, but I could be wrong.
I think if I'm listening right, though, Bill, what you're suggesting here is that, do we have, we thought we dodged the bullet with the September WASDE, but your comment is it's a lot harder to estimate what's standing out in the field than it is what's in the bin. And if I'm listening to you correctly, you're suggesting that, maybe we're not out of the crop yet on this bean crop in the U.S. Maybe we do have a little bit of a bullish surprise yet to get through. That tells me the October WASDE, which we may not get, could be really, really important.
Yeah. If I was cocksure about it, I'd say, well, it's bullish and the crop's going down, but I just don't know what we're going to end up with. I think it's a shortage of beans early and a lot of beans later, shortage of meal early, a lot of meal later, maybe will be the scenario.
And it's so damn hard to really get a beat on it because this was a really screwball August. Yeah. Beans are made in August. Wise man told me that too. And we had a beautiful first half of August and a horrifically bad last half of August. So how does that work itself out? So
we'll find out.
Yes, we will. Yes, we will. If the government stays open, if not, I guess we'll still find out. It just might be later.
So how does that work, Bill? If we don't get an October WASDE, will they just give us all that data in November, or will they just skip it?
Yeah, there's that's a good question. I don't mean to belabor with minutia, but we'll get, last time they just skipped it and we didn't get any data WASDE wise. There's other things like slaughter reports and pricing that are mandatory and go on. But one thing you end up with is no weekly export data. And then I think they give it all to you at once. So at some point, they'll give us about however many weeks it is. They might give us 4 weeks of export data all in one Thursday. And then say, here, you figure out what happened.
Yeah. You get it. Then you got to then kind of true up your checkbook balance to see if you got any money left, right?
Yes.
All right.
All right. Well, I think that about does it. Hope this was helpful to you. And we will see you next time we have one of these.
All right.
Cheers.